Gammon Infra came out with numbers, and expectedly so, not the best performance. Not that we expect that from any of the infra companies, but sales up 51%. It's essentially the interest costs which have really shaken up the bottom line. Of course, the EBITDA performance as well, a large blip on that. But the question mark really is what happens going ahead. Does the pain continue, or do they see some light? As Deepak said, for the markets, do infra companies see some light at the end of the tunnel? Parag Parikh, CFO of Gammon Infra, joins us on the show. Good having you, Parag. Thanks so much for joining in. So I wouldn't mince any words. It was on expected lines. While the revenue is done just about okay, in fact, you've done fairly well on the sales front. EBITDA, not the best of performances, and the interest costs continue to weigh down.
Right. Morning, Neeraj. Morning, Tanveer. I think the way you look at infrastructure companies, clearly most of these assets get financed largely, nearly being 70 to 80% on debt. And therefore, interest cost does play a very significant parameter when you look at the P&Ls of these entities. If you've seen us for this year and comparative to the last year, we've had at least two significant events, the way our P&L is reading, right from our income expense and more so also from our interest costs. We've had a project called Mumbai-Nasik Expressway Limited, which got fully commissioned in the month of September. And when the project got entirely commissioned in September, it therefore also transits not only into slightly a higher income and expense, but also the entire interest cost on debt, which till then to some extent gets capitalized, also moves into the expense statement. So that's one clear area where one needs to look at. Along with that, there was accounting treatment in respect of periodic maintenance, where we used to capitalize and write off over a period of 5 years. We actually over the year changed the accounting treatment for beginning to provide for it in advance rather than capitalizing and depreciating it. With this impact itself on our two existing annuity projects where this treatment was effected, that itself was large to the extent of nearly 27 crore each entity. And therefore, when you see that, that is more a one-time impact.
So are you saying, Parag, that this will change in the quarters ahead? My question mark really is for FY13 as a year. Do you believe that the pain that you're talking about on the interest cost front or on some one-off expenses, does it change in FY13?
Well, it does certainly change. The other impact that will gradually transit into, and as I've been mentioning earlier also, that we are in slightly an interesting time with a lot of projects coming up for commissioning. We already had our Kosi Bridge annuity job, which got commissioned, and we've recognized our income on that partially for a period of 2 months. We have Gorakhpur, which is almost there. And besides Gorakhpur, there are at least another couple of projects which are coming up for commissioning over this year. You may not see the entire income of entire impact of income and interest costs on that, since they're coming over a part of this year. But yes, things change from that perspective. To that extent, you see a higher income recognition. Not to say pro rata interest costs will not come in. And clearly the indicators with the last policy of RBI with a cut of 50 basis, we expect something moving positively in that direction. So coupled up with both the business side for us.
Numbers there essentially, I mean, how much do you think revenue recognition will change for the first 6 months of this financial year compared to the first 6 months of the last financial year? That's one. And secondly, with rates coming down, when will we see the impact of that on your cost of funds?
Sure. In terms of income recognition, as I said, Kosi we've just about recognized for about a month of 2 in the financial year. So you have an entire year's impact coming in out here. It's an annuity project. You get an annuity of close to 32 crore every 6 months, which effectively means you have an income of 64 crore straight getting added due to one project. Then we have Gorakhpur, again where our annuity is close to about 50 crore and which does come up for completion over this year. We do see a significant chunk of that coming in, also being recognized for this part of year. So at least these two projects come up immediately, and there are a couple of others which are lined up at least for completion over this year, which is more in the second half of this financial year. On the interest rates, clearly banks have already started reducing close to about 25 bips, though the entire 50 basis is as of now not passed on to the industry. But clearly over the next 3 to 4 months, I do expect interest rates coming down, and the impact of that in financials for any of us, we should not see before the third quarter of this year.